All right, now let's talk a little bit about the market. We're seeing triple-digit swings in the marketplace. Janet Yellen is confusing all of us, and we're in a presidential race. Nobody better to help us understand how to navigate this market and get a financial plan than our good friend Matt Reinke, Illumination Wealth. Good to have you as well.
Good to be here, Craig.
And we got a teammate of yours. Let's see if I can get this right. Alexis Ranglas Becerra.
Wonderful.
Close enough.
That's great.
Yeah, and you were nervous.
You did well.
Right? What's going on with the market?
So basically, this past week, the Fed came out, said that they're not going to be raising rates. To everyone's surprise, they've been back and forth, raising, not raising. What should we do? And they finally backed off what they said they were going to do, and so the market's kind of levitated somewhat higher over the past few weeks.
So isn't the Fed supposed to be a bipartisan, objective committee that helps monetary policy and gives us some sort of unbiased direction?
Yeah,
I don't think I could ever repeat that sentence, by the way. I just nailed it. No, but really.
You'd think, but they still have their jobs, you know, their tail is still on the line in some way, shape, or form, and so they want to look smart, and they have egos too.
But
so
why are they flip-flopping?
Well, because they don't really know what's going on.
That's good to know.
That's the bottom line, is they don't really know what's going on, and they can't navigate this behemoth global economy.
Do you think they should raise rates?
Do I think? No, I don't think they should be.
Really? How
rates.
come?
I just don't think the economy's at a place where it needs a rise.
Right. Well, inflation is tame, so
Yeah.
we should be all right. All right, but I always tell our audience, don't chase the market, chase advice. Get a good plan. You help people with planning. We got Alexis in here, helps people with insurance. She's going to teach us today how to put out fires, right? No, how to protect against fires.
Yes, protecting.
Got it.
I've got some simple steps for homeowners that they can take to mitigate a loss due to wildfire.
Well, let me speak on me. So I just renovated my house. Well, let me take over here. No, talk about me more. No, but I just renovated my house, right? So the house is worth more than it was with the money I put in. So I need to get a new insurance policy. So imagine I'm coming to you, I need a new policy. What are the things you look for?
Certainly. So that's a great question, especially with renovations. We want to make sure that the dwelling replacement value is in line. So the best thing to do is to consult with your agent, and me being the perfect example
All right, we'll
of that.
sit down, easy enough.
And what I would do is I would have a formal analysis review of your homeowner's insurance, your automobile, umbrella policies, if you have any rental properties, but regarding looking at the full picture, because that's what will benefit you most as the consumer with the multi-policy discounts. Now, going back to the renovations, it's important to know what you spent on all these
too much
renovations, exactly. And so we would take that, we would work with the insurance carrier directly. So my role as a trusted advisor is to guide you in the right direction, to make sure you're with the right company, with the right coverage in place, because God forbid anything were to happen, like right now. We're
fires, earthquakes,
exactly.
spilling, knocking over a candle.
Exactly.
So here's a question I have for you. So nobody wants to spend a lot of money, right? So, but you want to have the right coverage.
Right.
So how do you get the right coverage but keep your month-to-month cost down? Or do you recommend a high deductible? I mean, what is the
You can certainly look at
the sweet
deductible
spot?
options, yes. So with doing a full review, first we do, the dwelling replacement cost is based on your square footage of the home. There's also different rating variables. So, for example, location of the home, the year built. If you've got an older home, the premium will fluctuate there. So it really varies from company to company, but deductibles are certainly options. The higher the deductible, the less the premium.
Do you recommend that?
I do. I mean, it depends on the risk. If you've got a $1.5 million home, let's say, and you want to take a $5,000 minimum deductible, I think that's great. Some people want to go higher, $10,000, but it truly depends on what the dwelling value is and what you're willing to take on.
So you're helping people with their financial plan, right? So where to put their money in stocks, bonds, all that. How important are things like the insurance and the mortgage and all the things that you look at outside of necessarily the money management?
Yeah, the insurance is huge. I mean, we want to protect what we have. I mean, we can always grow later, but if we don't protect the big things and insure against the catastrophic losses, we're always exposed.
Matt, what about insurances on like your actual finances, like the money that you have, like things like life insurance? I mean, I hear from different advisors that even if the market gets crushed, you can have insurance in place. What are the insurance against a crushed market?
I guess insuring against the crushed market, there's things like derivatives and options that can bet against the market. But I think at the end of the day, it comes down to what's people's risk profile and how much risk are they actually taking in their portfolio. So people need to know ahead of time that there's going to be ups and downs. There's going to be crashes and panics and recessions again.
Yeah.
So how do we make sure that we have a plan in an investment portfolio that we can deal with the inevitable volatility?
Yep.
Not do we need to buy all this insurance against an inevitable decline.
You bring your crystal ball.
Yeah, I don't have a crystal ball.
I want predictions, man.
Yeah, I wish I could give them to you. Honestly, if anyone tells you that they know what's going to happen, they're lying. I don't even know what I'm eating for dinner tonight. How do I know what the market is going to do?
Oh, man.
And that's why it's also very important to have an umbrella in place. And that essentially the umbrella is designed to protect you above and beyond your underlying exposures. So in the event let's say you're in an auto accident,
right,
and you've got 250,000 bodily injury liability limits per person, 500,000 per accident, and you don't have enough, or if you get involved in an accident with someone who's uninsured or underinsured and you need more insurance, that's when the umbrella will kick in. So umbrellas are sold in $1 million increments. So you can go all the way from 1 million to 100 million if you want. So
Awesome.
It's really about protecting the assets, and just like Matt puts the plan in place, I, as an advisor, will put the protection in force.
Well, there's a lot of things on that financial wheel. I feel like we have people from our audience reach out online. By the way, if you have questions on this stuff, if you want to connect with these guys, go to craigsewing.com. There's a contact form. I'm happy to facilitate an introduction. We get all these inquiries online, and I feel like people bubblegum and duct tape together their team. I'll say my realtor's here, my mortgage guy's there, my insurance is there, my financial advisor's there. When the reality is, you guys are a good example of kind of a 1-2 punch, at least in this respect, of a synergistic relationship. Get financial advice, have a good plan, make sure your home is covered, your car, and all that. And this is what we do. So again, don't chase the market, chase good advice. Two great advisors here. Alexis, Matt Rinke, good to have you on the show. Thank you so much.
Thank you so much.
Coming up next, we're diving in the real estate market. The #1 realtor on the planet, Melissa Tucci, joins us in studio next on The American Dream.